Hey everybody, James Walker here with Fayetteville Real Estate, local real estate agent here in Fayetteville, North Carolina. And today I'll be talking to Mitch Guy, local lender I use a lot, and we'll be talking about what's going on with the mortgage interest rate. And of course, I think a couple days ago I heard about the Federal Reserve cutting interest rates down to zero and what that means for the mortgage rate, if it affects it or does not affect it. So Mitch, let's take it from here, introduce yourself, and we'll go from there.
Absolutely. Thanks, James. Always a pleasure being out here. Beautiful day here in March. Always good to connect with a referral partner, just kind of get the word out about what's going on in the market. It's crazy times. Obviously, we got the virus contagion going on, and the Federal Reserve has been taking action along with other parties that are affecting interest rates. Sunday afternoon, it hit the news that the Federal Reserve cut the short-term interest rate down to close to zero, between 0 and 0.125, I believe it is. And everybody was asking, can I get a mortgage for 0%? You got those questions, didn't you, James?
Yes, I did.
I mean, everybody was hearing about it, and we're thinking, okay, well, turns out you can't get a mortgage for 0%. The Federal Reserve is obviously the body that governs the banks and the lending between banks. There's obviously millions, billions, potentially trillions of dollars changing hands short-term basis every day. And those rates that the Federal Reserve sets dictates banks lending to one another overnight, short-term, to obviously keep liquidity in the markets and keep things straight. Now, it's absolutely connected to mortgage rates in some form or fashion, but it in no way says mortgage rates are going to drop directly with what the Federal Reserve does. So in short, it affects it, it plays a part, but the tons of different factors that go into what brings you a mortgage rate, the Federal Reserve is only a small part of that.
Okay.
Does that make sense?
Yeah, it makes sense. So you're saying zero interest rate for mortgage loans that does not affect it at all. I mean, a little bit, but not a lot, like you said.
Sure, you're never going to have a 0% mortgage. Historically, I'm not sure that the 30-year mortgage rate has ever averaged much under 2%. I mean, 3%. It's gone definitely in the twos, and obviously there was times when people were getting that 2.875 mortgage on a fixed 30-year rate, but I don't see it going too much lower than that. But hey, we're in unprecedented times. We don't know what's going to happen hour to hour, day to day here in our market, just with everything going on. Everybody's very, very skittish, scared. Investors are looking for cash. They're looking for safe havens. So with the stock market as volatile as it is, all bets are off. But I specifically don't foresee the rates going for sure any lower than the mid twos. But hey, time will tell. I've been surprised before, and I could be surprised again.
So right now, currently, what are the interest rates for VA, FHA?
Interest rates are moving a lot. They're moving a lot in the short term and overnight. Usually, about 2 weeks ago, rates got as low as they kind of bottomed out for the short term for March. First week of March was super low. We were seeing VA rates right around 3%, maybe getting right underneath 3%. Right now, you're dependent on a lot of factors, including credit and the details of the loan, but you're somewhere in that mid 3s to mid 4s range. And I don't want to quote you a rate because right now so much has changed inside the hour that if I give you a rate, I'm sitting at my desk giving you a rate at 3 o'clock today, 4 o'clock could be completely different. So in this point in time with the way the markets are, what we recommend to folks are they're patient, they spend some time waiting on the rate to get where they want it to get to, and then whenever the time comes and the opportunity presents itself to jump on the lower rates, you got to be ready to go. So if you got a 30-day contract, 45-day contract, what we're going to try to do is be patient, look for the best spot to lock in, and then obviously lock it in and forget about it, not have to worry about the craziness that's going on in the markets.
Okay. Would you recommend someone refinancing their house right about this time with the interest rate being so low?
Refinancing has been a huge thing that everybody's talked about over the last 30 days. And absolutely, if you can save, general rule of thumb is if you can save 1% on your mortgage, then absolutely take a good look at it. Sometimes less. If the loan amount's larger and you can save 0.5%, it very well may make sense. But every individual is different. If you've got a 5% mortgage right now, absolutely, you need to be looking at your options as far as refinancing, because if we can get you into the mid 3s, you're going to be saving a ton of money, regardless of if you got a $500,000 loan or you've got a $100,000 loan. So that's worth looking into. Things to consider with the refinance, obviously, are if you're doing a 30-year, you're going to be resetting the term of your loan to 360 payments in 30 years. If you're looking You're probably going to skip a payment or two, which is always nice. You're going to get refunded your escrow balance. As you know, you got an escrow account typically attached to your mortgage.
Yes.
So you're going to get refunded that, a little bit of influx of cash, but you're also going to be resetting the new escrow balance for the mortgage that you're setting up. So that's essentially going to be a wash, but setting up those new balances for the escrows in all likelihood can be rolled into the loan. So you're basically getting a little bit of bonus into your pocket. So it's always good to look at, but every individual is a little bit different, and you got to see what that sweet spot is for making it worth your while to obviously pay the fees, because it's not free to refinance.
Yes.
You're always going to have an attorney that's going to close on the refinance. You're going to have title insurance. Typically you can do a reissue on title insurance, but a little bit cheaper rates on title insurance. But you're typically going to have an appraisal on a lot of refinances. Now, VA IRL, we call it, interest rate reduction, does not require an appraisal. But in a conventional loan, if you're looking for a good value to get your LTV down, you're going to have to pay $500, $600, $700 for an appraisal. And right now, appraisers are as busy as they've ever been.
Yes.
I had one yesterday. We asked for a due date of the 28th or 9th, and he came back and says, I'll have it to you by the 3rd of April, and I want $250 more than you're offering me. So the appraisers are kind of sitting in the catbird seat right now and kind of dictating their own terms. So if you're not willing to pay a little extra for an appraisal, you better get in line, because it's going to take a while. And on the same front there, James, refinances are always going to play second fiddle to our purchase business and to our referral partners. Like James here, if he's got somebody looking to buy a house, they're going to be prioritized over any refinance business that we do, because James has got clients that need to get into a house in 30, 40, 50 days. And we're going to make sure that all of our resources are aligned for our referral partners like James, instead of those who are obviously living in their home. They're not moving, they're not uprooting their family, and they can wait. They can be patient, and we obviously are going to look to push those as fast as we can. But our purchase business is our priority. Our referral partners are always our priority.
That's good to hear. Would you say it's a good time for someone to purchase a house now?
Yeah, I think so. I mean, I think our market's great. I think obviously it depends on the individual circumstances, their family, their employment situation. But it's a great time. Interest rates are low. Instead of paying somebody else's rent, build your own liquidity, build your own value in a home. You obviously are in a very competitive market right now. Inventory's low, but it's a great time. It's a great time to take advantage of putting yourself in the position to get into home ownership and take advantage of everything that the benefits.
Okay. Is there anything else you'd like to add? Anything I'm not asking you think is important?
Absolutely. Well, I mean, we deal with it every single day. We talk to borrowers that are obviously looking at options, and we're a local lender here, Southern Trust Mortgage, over on Sycamore Dairy Road. There's 6 loan officers here in this market. We've been taking care of our market for years and years. So we're always available. We're putting a priority on customer service, customer experience, communication with our referral partners, as well as our clients, our borrowers. We're just trying to educate folks. We're trying to set reasonable expectations and exceed them. We want to do everything we can to communicate on the front end to make sure your buyers are rock solid when you're going out there spending your hours, days, and weeks looking for houses, because we're not ones that want to let you down. We're not ones that want to say, oh crap, on the back end when we hadn't looked into anything. So we're going to thoroughly look over a client on the front end. We're going to take the stress out of the situation and make sure you guys know that when you're looking to buy a house, you're good to go.
Okay. Well, thanks you guys for watching again. I'll leave Mitch Guy's information and in a link below. So if you have any questions, reach out to Mitch. You can. I'll leave his telephone number and his information below. Also, my information will be in the link also. If you got any questions, please don't hesitate to ask. See you guys in the next video.
All right. Thanks, guys. Take it easy.